Hello everyone. Yesterday around 5:30 a.m. Indian Standard Time, Infosys released its September quarterly results. In response to that quarterly results, Infosys ADR in US dropped over 7%. So along with the regular pre-market stuff, let's discuss about that in detail. Do the Infosys quarterly results that bad? The answer is no. If required, please pause and have a look. On quarter-on-quarter basis, revenue increased 2.8% and net profit increased 4.5%. In fact, even EBIT margin improved to 21.22% from below 21%. Here, most of them, revenue, EBIT and EBIT margin all improved and it did beat the analyst estimation. Only net profit below the estimation, that's to just 50 crore rupees. So, the quarterly result is clearly better, but the problem is in their future FY 2024 guidance. In last April 2023, Infosys gave the future revenue guidance in constant currency of 4 to 7%. During the last June quarterly results, they reduced and revised that guidance to just 1 to 3.5%. Now, yesterday, Infosys further reduced the revenue guidance to just 1 to 2.5%. So, because of this poor guidance, US market reacted and dropped the Infosys ADR by over 7%. Here, I'm thinking they overreacted. And also, I don't understand why Infosys reduced their guidance. They said at present they got the order bank of 7.7 billion US dollars, and in September quarter on the constant currency term, revenue increased 2.3%. So it's not that bad like they project. Again, if you see in July month on the June quarter, they did the same thing, even worse. Again from 4 to 7% guidance to just 1 to 3.5%, and in response to that, on July 20th, Infosys ADR dropped 6.8%. And in line with that, in the following Friday, July 21st, Infosys share in Indian market dropped 8%, which in turn dragged the Nifty down over 200 points. Now, last night, again in response to the guidance, Infosys ADR dropped 7%. So today, October 13th, will it repeat the same July 21st? No, I don't think so. As I said, in April guidance to July guidance, there was a big drop, and on that quarter, Infosys didn't beat the analyst estimation. But this quarter, it's not much of the drop, and also they did beat the most of the estimation with a future order bank of near 8 billion US dollars. So, I don't think Indian market will react in the same way that US market reacted. In fact, today I'm planning to invest small quantity 15,000 rupees each on Infosys, HCL and TCS. Again, this is not a recommendation. I'm just telling what I am planning. Please don't make any investment based on this. Anyway, yesterday it's not just Infosys. Even HCL also released their September quarterly results. On quarter-on-quarter basis, their revenue increased 1.4% and the net profit increased over 8%. Here, HCL beats the analyst estimation in every metrics. The highlight is their EBIT margin improved to 18.4% from below 17%. Just for comparison, Infosys EBIT margin is around 21% and TCS EBIT margin is over 24%, and that's the reason compared to HCL, Infosys trades in higher PE ratio, and compared to Infosys, TCS even on higher PE ratio. As we discussed a lot of times, market always value premium to the higher efficiency company. Anyway, like Infosys, even HCL also got the same problem. In July month, they gave the FY24 revenue guidance of 6 to 8%. Yesterday, they reduced that to just 5 to 6%. It will be really interesting to see how market is going to react to both the results. So that's all about the results. Now let's move to the US market. Before their market opening, US Bureau of Labor Statistics released the consumer inflation data for the September month. I hope you all remember in the last 3 days, Monday to Wednesday, US market turned and closed positive because of two reasons. One, 3 FOMC members gave their view that they want to stop the 10-year bond yield increase, and thus they intend to pause the interest rate decision in the upcoming FOMC meeting in November. Second, two different entities forecasted that the September month inflation will be lower. Now coming to yesterday's data, here the top is the core inflation and the bottom one is the headline inflation. Both of them got both the value month on month basis and year on year basis. Now if you see the data, yesterday the headline inflation for September month comes as 0.4% in month on month basis and 3.7% in year on year basis. In both the case, it was higher than the expectation, but in month on month basis, it was less than that of the August month. Now, if you see the core inflation, on month on month basis, it increased 0.3% and year on year basis 4.1%. Here, the data comes as in line with the expectation and less than the August month. So, in summary, the US inflation data is mildly negative, not much. So, in line with that, from the opening, all three major index in the US market traded flat. But at 1 p.m. Eastern Time, US government made the 30-year bond auction. In that, the auction bond yield comes as over 4.8% from below 4.35%. Here, this 4.83% is the highest bond auction value in the last over 20 years, which immediately increased the 10-year bond yield value to over 4.7% and dragged all three major index to down. In the end, Dow Jones decreased 0.51%, S&P 500 down by 0.62% and Nasdaq dropped by 0.63%. In case of VIX, it increased 3.7% and moved near 16.7. About oil, it stayed at the same place roughly. At the time of this video, WTI crude oil closed at near $83.5 per barrel and Brent crude oil trading near $86.5 per barrel. Coming to Indian ADR, we already discussed about Infosys and that Infosys impacted negatively on Wipro as well. In case of banks, again, despite closing positive in Indian market, both ICICI Bank and HDFC Bank closed negative in ADR. Then about GIFT Nifty at 3 a.m. Indian Standard Time, it closed at 19,675, equating that to the spot market, indicating the gap down opening of 160 to 180 points. So that's all happened in the global market. Now let's move to the India specific info. First, yesterday it's not just US inflation. As we know, India also released their September month consumer inflation data. I mean, the data comes as just 5.02% against expectation of 5.4% and also it's way below the August month inflation value 6.83%. Here, if required, please pause and have a look. This is the internal subdivision of India's consumer inflation. Only meat price increased higher compared to August month. Other than that, every metric posted comparatively low inflation value. Second, along with the inflation, Indian government released the August month industrial growth IIP. The data comes as 14-month high value 10.4. Again, here also in subdivision, every metric it posted a better value. If required, please pause and have a look. Third, some negative info about specific stock. First, Dr. Reddy's got the form 483 with 9 observation, meaning they violated the US compliance in 9 places. Then about Jio Financial, in the last quarter alone, Indian mutual fund offloaded near 3,000 crore rupees worth of stock. Moving on, finally, again for the 17th straight session, FII net sold for approximately 1,860 crore rupees and DAI net bought for approximately 1,530 crore rupees. As a summary, US market closed negative, but for the moment, this Infosys results looks like going to impact on the downside heavily today. Hence, even GIFT Nifty indicating the gap down opening of near 180 points. Let's see. So far this whole week at the time of opening, Indian market didn't follow GIFT Nifty and nor US Indian ADR stocks. Then as per stock open interest, Delta Corp, TCS, Infosys and BHEL got an increase in open interest along with a negative close, indicates the short build-up. On the other hand, Bosch, Maruti Suzuki India, Sun TV Network, National Aluminium Company and Interglobe Aviation got an increase in open interest with a positive price close, which means these stocks got the long build-up. Regarding the things to look out, on the earnings side, it's just HDFC Life Insurance and Aditya Birla Money are some major companies' earnings scheduled release today. Then about macro, it's just wholesale inflation, WPI data for September month and it is projected to increase a bit in September. Just for info, for August month, WPI data came as 0.5%. Moving on, next topic, technical. Here we know, as we discussed, Infosys expect to impact negative, but in this section we are going to discuss purely from the technical standpoint. I hope I'm not confusing. Yesterday, Nifty opened on a flat note and consolidated for most part of the day, and in the end it closed marginally down approximate 17 points. So, after a sharp rally of approximately 350 points in the last two trading sessions, yesterday Nifty has been consolidating. Actually, in this situation, this consolidation is a healthy sign, and so it will set the floor for the next leg of up move. Anyway, at present, the hourly momentum indicator has a negative crossover, which is indicating it can lead to more consolidation. And in case of a dip, 19,750 to 19,730 is the immediate support zone. On the downside, the gap area formed in the range 19,718 to 19,757 is likely to act as a short-term support, and on the upside, the rally has the potential to extend till 19,884 to 20,030. Then about Bank Nifty, it also consolidated within a range, and thus it formed an inside bar pattern. The hourly Bollinger Bands are contracting, and hourly momentum indicator has a negative crossover and is still far away from the equilibrium line, indicating that consolidation is still not complete and can continue over the next few trading sessions. Technically, any dip towards 44,400 to 44,300 zone should be the immediate support. Once this consolidation matures, we can expect the positive momentum to resume on the upside till 45,050 to 45,350, which coincides with the 50% and 61.82% Fibonacci retracement level of the fall. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video, so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment based on this, as I'm not a SEBI registered advisor. I'm doing this for my and viewers' educational purpose only. Thanks for watching.